All right, so let's get into what is the best Bitcoin strategy out there from a much more global perspective, because there's a lot of money moves being made in the markets today. Two of the biggest whales out there would be Cathie Wood and Mr. Michael Saylor. So we're going to break down how they're playing the market, how they're intending to run this out, and what this might play into for the price of Bitcoin in the very near future. My name is Paul Barron. Welcome back into Tech Path. Let's get into it. I do want to thank our sponsor today. That's the Bitcoin conference right here in Miami 2023. So make sure and check it out. We're going to leave a discount code link down below. So make sure and use that. You can get discounts on your tickets there. If you are coming, make sure and DM me over on Twitter at Paul Barron. Let me know you're going to be here. We're probably going to do a little mixer or something. So I'd love to get some of you Diamond Circle members to come over and hang out, but it'd be great to see you. So make sure and use our link down below. It does give you a discount. All right, let's get into a couple of points here I want to hit on. And the first thing I want to jump into is Bitcoin metrics, kind of this statement, to the moon, all-time high for hash rate, daily transactions, ordinals. You can kind of see a little bit of it right here. Hash rate, total computing power on the Bitcoin blockchain just soared 439 exahashes per second. This is pretty significant. Also, the number of transactions processed on Bitcoin blockchain in one day exceeded 682,000. A lot of that's coming from the ordinals, as you guys know, has really accelerated the transactions, which has really been unused transactions for so long. And obviously that has changed with what Ordinals is doing. What I want to get into here is the Microstrategy Q1 performance. And I'm going to go in and just kind of highlight a few of their key points that they made. First, this is their Bitcoin holdings, their evolution. So you can kind of see where they grew, how it's grown. This goes their entry points, a little bit more volatile, where they were purchasing, kind of see their averages, which I believe is going to be one of the things that may come in and cause a little bit of a problem for MicroStrategy. Here's their total revenue, a little bit down right here on total revenues from Q4 22 versus now at 121.9 million. Even though that's still somewhat in line with if you did a comparison to say Q1 of last year versus Q1 of this year, that's actually an increase, but it's down from the previous quarter. So something to be aware of, just one of those things you got to watch. All right, so the last point I want to make here is their innovation in Bitcoin. This is their Lightning platform strategy, and what you'll notice here is they're developing a new software and products stack that essentially is going to allow people to adopt Bitcoin easier. And if you just look at some of the things they've got in here, let me kind of zoom in on that a little bit. I'll get it up there where you can see a little bit more of it. But right there are the Lightning wallets: Cash App, Alby, Strike, Moon, Breeze Wallet, which is the one for the podcast apps on that Podcasting 2.0, and then Phoenix coming in there as well. All of this really tying into the framework of Lightning. And this is something that we've talked about before here on the show, is that Saylor is all in on Lightning. In fact, I think what he's doing to kind of build around this. All right, additionally, he's rewarding people for using the platform in Satoshi. So this is the Lightning Rewards. It's an enterprise platform, incentivizes employees and customers to take certain actions and rewards them with Satoshis instantly. So again, building a framework around the Lightning Network. We've talked about this before on the show, what Michael is trying to do, what Saylor is trying to do. And I think this is one of those things. This could be beneficial for MicroStrategy as a whole, but more importantly is, how does this play out in how he manages, or they manage, their potential exit liquidity, or scenarios playing out of how long they hold Bitcoin. That's going to be the bigger picture. There's a few clips here. This was on the George Gammon show. I want to listen to a couple of these clips. Listen in.
Probably the other point worth making is, okay, so why should we do it? Why would anybody want to invest in MicroStrategy? I'm going to give you the quick reasons why. Number one, a lot of people in the marketplace want to be long Bitcoin with a zero fee or a moderate yield. There is no spot Bitcoin ETF.
Correct.
And so we offer an operating company where you can actually buy Bitcoin. Now you can say, why don't they buy the Bitcoin? Well, the world is full of hundreds of billions, if not trillions of dollars of capital that are locked up via their mandate, and they are not able to trade, custody, property, or commodities. It is literally either illegal for them to do it, or their mandates prevent them from investing in the commodity itself or the property. They have to invest in the security.
All right, so to his point there, dead on. And this is one of the elements I think that has always been the scenario that plays very strongly for MicroStrategy, is that they are kind of the go-to place for this. Sure, you can play into things like GBDC and some other aspects, which I'll talk about here in a minute with what Cathie Wood is doing in her strategy. But if you look at this, and if we don't get an ETF, if one doesn't roll in, MicroStrategy may end up being one of the safe havens for something like this. And he is exactly right. A lot of institutional capital is looking for a potential here. He went on in this same podcast with Gammon to go a little deeper on this.
Yeah, well, we have 3 different relationships, and one of them is Coinbase that has been disclosed in the past. I don't really wish to disclose the other 2 right now, but they're all U.S. companies. They're all regulated U.S. companies. They're all audited U.S. companies. And before we would work with any of these counterparties, we would put them through a vetting process that ranges anywhere from 6 months to 18 months of.
All right, so what he's talking about here is where are they parking all this Bitcoin? And obviously Coinbase being the one. Doomberg, if you guys have seen Doomberg before, he's actually been on our show. He only comes on as an avatar, but he actually drills in a little further in the podcast to try to get Michael to give it up. Listen in.
A DM earlier that you had said on a podcast, but I couldn't find it, that the other 2 were NYDIG and Fidelity. But I guess if you're not going to reveal that here, if you already have before, just curious as to why would the nature of the custody would be required to be secret. The custodian would be required to be secret if you've done the full vetting that you claim that you have.
Well, I mean, the obvious reason is because we don't want to create attack surfaces for hostile actors, right?
Yeah. So I mean, the point being there is that Fidelity's in the game. We know Coinbase obviously already is. NYDIG we know as well. But he's dead on. He is right in the sense of getting into these tax positions that could get into some challenges within where MicroStrategy's overall vision is going and playing out. Further into this, I want to go to this article right here. They hint as a Bitcoin bag dump while offloading shares. Now, this is the point that could be very significant in this overall strategy. Saylor looks to be very tight spotted around 2.1 billion outstanding in debt. Remember, a lot of this debt came from COVID money, basically zero fees, and the company used to buy Bitcoin, coming back to haunt him. Revenues from its analytics business may not be enough. We showed that earlier of a little bit of a declining revenue number. To pay its debt obligations as a result. So it may be forced to sell its Bitcoin holders or more of its shares. Most likely it's going to be a percentage of it, is my guess. Is when you look at scenarios that someone who is as driven and convicted about the asset as Saylor is, this could also be the ultimate rug pull. Let's just say it. This could be a big damage on Bitcoin as a whole. This is one of the largest whales out there outside of the Grayscale Trust. So further into this, I want to play one more clip, and then I'm going to show you some breakdowns on Cathie Wood, because she's going a little different strategy than what Saylor is doing. Listen into this clip.
In this particular case, we could sell the Bitcoin and pay off the 1.7 billion and still have excess assets. We've got $500 million in senior debt, but it's actually secured against the cash flows of the software business. And that business is a healthy cash generating business. So we anticipate we'll be able to refinance that over time. We'll probably be able to refinance the other debt if we want to over time.
All right. So refinancing debt, yes, he's going to have to wait some timing. Timing is going to be very critical here in the market, because remember, when you look at the current Fed fund rate, 5% going up, that would not be a good time to do this. So he is in a bit of a catch-22, because he is correct. He's got some good liquidity coming in from cash reserves out of MicroStrategy. I think the quarterly was 121 million versus his last year quarter over Q was 119 million. So it's up, but it's down from the previous quarter. So is that continuing to slide? Could we see a quarter 2 show out with further sliding? That will be the case that could cause a little bit of a struggle. Now, when I grade what he's doing, if I look at this strategy and I think, all right, you're building the framework through Lightning, what they're trying to do to incentivize people, all that stuff, they've got the right kind of partnerships. Those are all good. Then you look at, all right, I've got another business over here. I'm creating cash flow. That's another positive. All of this is good in the sense, the only problem is that they're setting on these a large amount of money that note is going to come due. They're going to have to pay it. And at some point, where is the largest treasure trove of assets? It's Bitcoin. So that is the one concern I would say plays into this. Now let's jump over to Ark. Now, Cathie is going a little different strategy here. She's, of course, investing also in companies that are investing in Bitcoin. Here's Ark's holdings of Square. This is updated daily, so you can kind of see her growth all the way up to where they are right now, which is currently 6.6 million shares, price around $60, holding in there. And that's good because I think this is something that has been slowly shifting away from some other aspects. And I'll kind of give you my score of the two, Bitcoin whales here of where this might play out in the long term. Further into this, Ark Invest CEO wagers on Cash App over PayPal and Venmo for the long run. Now remember, this article was back in April of 2022. Let me highlight that right there. 2022. Now, at the time, PayPal was still in the process of trying to pull a deal off, get more active in crypto. And then here recently, as you guys know, we just reported on this, they actually launched the next upgrade, which was this story right here. PayPal upgrades crypto services to 60 million Venmo users, allowing transfers and external wallets and exchanges. So you step back and you kind of look at Cathie's position over on what's happening with Block, and you think, wow, man, if you'd have been in on PayPal with this very same thing, you would have been good. So things can change a little quickly here, and still could for Cathie Wood. You look at PayPal's reserves right here. I mean, obviously it has not been a good run for PayPal, so maybe this was a bit of a Hail Mary. This is their current stock price, holding at $72. So this would not have been a great investment if you'd went all the way back into, let's say, February of last year. Let's take a look at, right there. February of last year, you would have been down 57%. So that's a scenario that her as an investor, and she's playing this through leverage on activities within companies who are betting on crypto. Again, this is where Cathie gets into some interesting analysis. This was Cathie's their presentation on big ideas. Remember, this is her big play right here. This is showing JP Morgan's deposit accounts right here, even though that's going to explode quite a bit because they're up over 2 trillion, I think, now. But what her statement is that the unique digital wallet users are going to explode. So the wallet play here could be the bigger opportunity for how maybe Ark and Wood's strategy could play out going long on Bitcoin, Ethereum, and others in this sector. So there are some things happening here within her strategy, I think, that are good, but also a little bit risky compared to where Saylor is right now, outside of him having to pay back the loan, outside of that. And I know that's a big outside of that. But Ark's Coinbase holdings, again, also just lifting boats. Had that little bit of exit right there that we saw when the Wells notice was done. Then we see a continued climb right here, now holding around, let me get on that last bubble right there, 7.8 million shares, average cost of $254, holding in on that right now. Now Coin, and I'll go back to Coin at $254. This is where Cathie's a little bit upside down. Let me jump out of that and go into tech, and we'll take a look at Coinbase. So right here, $254, you're holding at a $51 share rate right now. So this is the all-in bet for her, is that if Coinbase does not pull out of this, then this is a huge, huge black eye for Ark. Now, playing this out, let's go on further into this. Coinbase holdings, let's go over here to Coinbase, doing now international exchanges, launching amid the SEC crackdown in the US. So this could play out two ways. Remember, there's a lot of things happening in the market right now with Coinbase. They have this massive campaign going out, join with Coin, help stand beside Brian Armstrong, all that. I'm a big proponent of that. I feel like all companies should be, more active in DC. But the international exchanges, now they're going head-to-head with Bybit, they're going head-to-head with OKX, others out there that are really already well vetted into these markets that I think is going to be a struggle for Coinbase to completely do, even though they could do it with some interesting aspects of value, maybe some lower spreads, things, just creative marketing to be able to get into those markets. Still could happen, could pull them out, but unless we get something here in the US where Coinbase survives, this would be one of the downfalls of Cathie's strategy. And if you look at her crypto holdings right here, you've got Square right there, $60, and right there is Coinbase, holding it at almost 4%. And let's see, who else did she have down there? Oh yeah, Robinhood right here, also coming in at 2.49% of her overall. This, of course, is all of the different positions. You guys can get to this pretty easily, but this is all 27 of the ETF holdings on RKK. All right, so this is their hood position going up and then kind of staying sideways and trending down slightly. So maybe this will change with Hood's invigoration of what they're doing within their new wallet platform and what it might look like with their new design on the app itself to involve more crypto integration. We'll see. This was Robinhood right here saying, hey, wait a minute, try the new Robinhood Connect. Now you can get buy and transfer crypto on My Doge Official, Giddy, DeFi, we talked about them the other day. Phantom coming and Exodus also wallets coming. So this, to me, this is one of the bigger plays I think that is good for Hood. Could it be a long-term play for them? Maybe, which could also, again, play well for her. Furthermore, you've got Cathie's Grayscale Bitcoin Trust holdings slowly declining. So there is a potential exit here at some point. And there's a clip here that I want to play because this to me is really where the rubber meets the road for Ark's position and what Cathie is doing. It's kind of all in on wallet adoption, the evolution of adoption in general. Legislation will be a big part of it in general just because of the perception and how it's perceived by the American public. All right, so let's get into a little bit of her in a clip that she was talking about Grayscale with Peter Mack. Listen to what she had to say.
Which you've explained. So I put, I don't think I've ever disclosed this before, but I put $100,000 in.
$250.
Yeah.
I don't know how many Bitcoin that is. What's that, 400 Bitcoin?
I don't even know. And I wasn't counting at the time, but and I've kept it all, but because as soon as he said that, the
You did
light
that
bulb went
personally
on.
or with the fund?
Couldn't do it with the fund
Nice.
because we had to find a security. And so this thing called GBTC,
Yep.
which everybody knows now is Grayscale Bitcoin Investment Trust, that had the 1-year holding period, and they were just cycling through that.
Sorry, this is the rules of your fund. It means you can't
Yes,
buy
ETFs
directly.
can only own securities. And so we had to find one. And we found Grayscale. Actually, Grayscale was one block away from us in Chelsea.
Nice.
And so they opened their books, and we had to go to the New York Stock Exchange. I mean, we had to do so much to get Bitcoin in. So we put it in ARKW, our next generation internet fund.
All right, so you can kind of see it was the 1-year holding period. That's something that has been discussed as well. The last component, I think, here, when you try to piece this all together, is the fact that she's starting to dump those shares. So here was the story: Cathie Wood, Ark dumps 500,000 in Grayscale shares in the trust, Coinbase, and then adds Coinbase stock. So it's a dangerous game because I think it's one that you're betting on one side of the market or the other. You know, if you look at Saylor, he's betting on adoption through Lightning and the eventual evolution of where Bitcoin is going. He's got to pay back that big loan, but he's got a good strategy over here with Cash Cow and what he's doing on Lightning. Then you look at Ark, they're doing it through a lot of, I feel like, risky high-tech investments, meaning I won't know that I would say coin is a high-tech investment, but it's a bit of a risk investment for sure. So one of the things you have to look at here with this risk level is things like this right here. 21 shares. Cathie Wood revives Bitcoin ETF bid. And again, this gets back into her partnership with them to try to get this back going. This would trade under the ticker ARKB. 21 shares initially filed this product in 2021, and again last May, with both attempts, among dozens others, application being rejected by the U.S. Securities and Exchange Commission. So she's still after it because she understands at some point that's going to be a play that she has to make. So there's just a lot of balls that are juggling with her strategy. And I feel like some of them are a little bit more risky. So this is, under the certain circumstances, I would say that Saylor's probably got a little bit stronger position. Granted that he doesn't end up selling, and it depends on how much he would have to sell and how much pressure would be on the business to sell based on how to get those loans paid back during those correction periods. This is all timing, and it's actually timing for both of these entities. Whether you look at Ark and what her strategy is, you look at Saylor and what his strategy is, Microstrategy. It's all timing because they're all going to be tied to how not only the market responds, but also how the Fed and the Federal Reserve responds, because this each has a certain implementation on both of their entities and how they're going forward. Both, of course, is going to drive Bitcoin up as we see Bitcoin moving into its next halving cycle and into its next cycle. But all of that could come to a screeching halt if we see a major recession and or major implications around the banking industry, as well as even some of the side of productivity and things of that nature. So macro still plays a big part of this. This is why this game is so complicated, guys. It's a tough one to run. Best thing to do, of course, is to jump into the Diamond Circle. It's the best thing to do because you get additional content. You're going to get additional podcasts where we do deep dives, more additional research that we put in on all these shows. All that happens on the Diamond Circle. It's free. Just use the link down below to get in on that. It's the best place to go. If you want to reach me, it's out there on Twitter, @PaulBaron. We'll catch you next time right here on TechBath.